Hello, beautiful people. My name is Kayla Stafford. I am your local Atlanta real estate agent, and I'm here with Yolanda Bowden with Home Access Mortgage. Hi, Yolanda.
Hi, Kayla. Thank you for having me.
So, tell me a little bit about yourself and your business.
Well, I am a senior mortgage loan originator at Home Access Mortgage. At Home Access Mortgage, we wholesale. So we have so many products to help people become homeowners. Whether you're a first-time home buyer, your existing home buyer, you want to upgrade, you want to downsize. I specialize in first-time home buyers. I specialize in veteran loans. However, we handle all loan types.
Okay, so you did mention you are no longer in retail, you are a wholesaler. So, what's the difference?
Well, with retail, you have stockholders, they get involved. That's when it kind of can help hurt the buyer as far as having to pay a higher interest rate. With wholesale, we don't have that. We is based on what the government sets out there, and we cut out basically the middleman. So we're able to offer better rates, more products, better and better service to our clients. For instance, with retail, it normally takes about 30 days. With wholesale, anywhere from 15 to 20 days, you can be a homeowner. Long as you have your ducks in a row. And also as a wholesaler, I'm able to assist you with some of the closing costs.
Okay. Oh, we always love that. We love free money, don't we?
Yes, we do. Yes, we do. It's just we're local. But so that you know, for myself, I'm actually licensed in Georgia, Florida, Alabama, and we're soon to be adding North Carolina.
Oh, okay. That's great. I actually
Okay.
have a lot of first-time home buyers that come to me. What advice would you give to these first-time home buyers in showing them the process and how easy it actually can be to buy a home?
It actually is very easy. The first thing first time home buyers go, oh, do they have first time home buyer program? Of course. But I try to educate my buyers, and I'm with you so that you know from the beginning to the closing table and actually beyond. The first one, what kind of down payment assistance program you have? I need everyone to know free is not free. Georgia Dream is a great tool. However, you will pay for it, and it generally is paid for in the interest rate, which meant that you could be paying anywhere from 100 up to $400 in addition on your mortgage. Okay, so again, so let me give you an example. Say you want to buy a house that's $200,000, where if you were using your own money or some other programs that I can offer you, say we're using Georgia Dream. Normally, your note would run you, I'm gonna say approximately about for a $200,000 house, you're looking at about 15 to $1,600. When you use Georgia Dream, they claim they gonna give you $7,500. But what they're not telling you is that your note now will be between 16 and $1,800, depending on the interest rate, because those do change on a daily basis. And that's for the life of the loan. Also, you have to qualify with Georgia Dream. You have to have a minimum score. And then you can only make so much, you can only purchase so much of the home. And you have to stay in a home a certain length of time. Then you
So,
still have to pay it back.
what's the credit score needed for Georgia Dream?
For Georgia Dream, you need at least a 640.
Okay.
Okay. You need at least a 640. Um, that you do have to come to the table with your own money. They'll give you for a regular Georgia Dream $7,500. Then do have other ones, which is a PEN, which is protectors, educators, nurses, can go as high as $10,000. Again, free is not free. I have a program. It's called 1% Down. It's a conventional loan. You only have to have a 620, and we'll give you 2% or up to $4,000 toward your closing that you never have to pay back. You just have to, the only qualification again is a 620. And then the other thing is that your AMI, which is your average medium income, can only go up to 80% of whatever area you're trying to buy. That's a whole nother story though, but that's my homework to do to help you to get that up to the $4,000 or the 2% of the home you purchase.
Okay. So besides those two programs, are there any other first time programs that are available?
There's a lot. There's Chenoa. It's just too many really for me to go through. Chenoa is one where you have two loans. One will be a zero, but if you ever late or ever default, or if you sell a home, it comes into full play. Same as far as, let me go back as far as Georgia Dream. If you stay in the house less than 5 years, they still want, even though you're paying the extra monthly note, they still want their whole $7,500 back out of the proceeds if you sell it or if you refinance. Same thing with your Noah.
Within a certain amount of time?
Within this, if you do less than 5 years, you
Okay.
you have to give them back their money.
Okay. Okay.
Okay. So it's good if it's a situation where, say, like your landlord decided, oh, I want to sell this house. You only have, you got 60 days to move out. Also, with Georgia Dream, it can take up to 60 days because it has to be underwritten twice through my company and through Georgia Dream. Okay. But it's something that you can fall back on, especially if you say you feel like you're gonna stay in the house for the 5 years. Hey, if it works for you. Again, I have so many other programs. I do have the first time home buyer pro. I have the 1% down, I have the 3% down. We have another thing called Borrow Smart. It all just depends on what you qualify for. And I can tell you, I've been in this business. This will be my 23rd year. I have not ever had two loans that were the exact same.
Okay. Well,
Okay.
listen, we'll do another video where we can go through all of those step by step. So guys, stay tuned. I will link that video below. So keep that in mind. But let's go back, Yolanda. So I'm a first time home buyer. What do I need?
Okay, thank you. And I'm glad you asked that. And I will be with you from the beginning to the end. Basically, there is an application fee, but you get that back at closing. Then I'll need driver's license, social security card, 1 month of pay stubs, 2 months of bank statements, 2 years of W-2s, or if you're self-employed, 2 years of taxes of the federal, the 1040 taxes only. So because what I'm doing is, when I do your application, we'll look at your credit to see if you're credit worthy. Then we'll look at your finances, not only that you can afford the closing costs, but that you also can afford the home that I qualify you for. I will qualify you for the maximum. Don't mean you have to spend it, but you just know, hey, I can afford up to this amount of dollars. And just know for every $25,000 that a price increase, the house looks better and better and better. And it's a better return as well.
So as far as credit score, what's a really good credit score to have? And what's the minimum credit score that I can have to even just get approved for a home?
Standard, the 620. You're good to go. You don't have to, we don't have to do a deep dive into your credit. However, I can go as low as a 580. The main hurdle that I've come across, if I'm trying to do a 580, you cannot have any late payments within the past 12 months. One late payment, you're out of here. Every now and then we can get an exception, but it's rare because they're already taking a chance on you with the lower score. So they want you at least to show that within the past 12 months you have been working to improve it, and they know that if you keep doing that, it'll get better and better.
Okay.
And I need to say this: raised up with parents, numbers is all in me. My dad was an accountant. My mom was a bill collector. And one thing they both always instilled in me is, if you go out there, you need to take it serious when you say, hey, Mr. J.C. Penney's, Macy's, Visa, whoever, in good faith, if you let me use your money, I'm going to pay you back. That's all credit is. You went out there, as my mom said, you went out there, you have their stuff, now pay them for it.
Yeah.
Don't get an attitude when they call you and you didn't pay what you said you was gonna pay. Your word is supposed to be your bond.
Mm-hmm.
Okay.
Mm-hmm.
But then
Okay.
on the other side, as a lender, I will work with you and tell you what you need to do to get you back credit worthy. Hey, life happens. We don't judge. We want to make you a homeowner.
Okay, great. So another question was, as a first-time home buyer, how much do I have to put down, and is that the only cost of getting a loan to buy a home?
Okay. No, it's okay. It's a good question. Very good question. Because I have this all the time. When you are applying for a home, there is three parts to the closing costs. There's the down payment, there's the prepaid items, and there's the administrative fees. The down payment, if it's FHA, is 3.5%. If it's conventional, it could be 3, 5, 10 or 20%. USDA is the only one that you can get 0% as far as the down payment, with the exception, of course, VA loan. You have to be a veteran. You're not a veteran, don't ask. It doesn't matter if your dad was a veteran, your mom was a veteran, your cousin, your brother. If you yourself are not a veteran, you cannot get a VA loan. So with that being said, back to the down payment, then the prepaid items. Everyone that purchases a home has to pay their taxes in advance, and they also have to pay their home owner's insurance in advance. The government gonna make sure that taxes are kept in advance, and the lender's gonna make sure that that home is secure. You just never know because of loss or damage. The third part is the administrative fees. There's a lot of recording fees, there's the origination fees, there's the closing attorney fees. Anything administrative is in there. So when you add
So
those
that
up,
sounds like a lot of stuff.
it does. That's for me to worry about, and not for you. I'll just bottom line, I'll give it to you. I always say I'd rather give you the worst case scenario, tell you you need a little bit more, and you come to the table with less, than tell you less and you have to come with more. So take whatever the house is, multiply it times 8.75 to give you a general idea.
So
Okay,
8.75% of the total price of the house is
of the
what
selling
I'll be
price.
coming to the sales price. Yeah, of what I'll be coming to the table with.
Right. And then all you'll be financing is, say if the house is 300,000 and you put 3.5% down. I can do these numbers with in my sleeve. There's $10,500. So you take the 10,000 off of the 300, the price of the house, you're only financing the remaining 289,500.
Okay.
Okay.
Yep, got it.
Okay.
Thank you so much.
You're welcome. You're welcome.
Any
And
other advice as far as preparing to buy a home, whether it be credit wise or saving money, even when you're starting the process, what are some things I should not or should be doing when I start buying a home?
one, I have a thing called buy it thou shalt not. Don't quit your job. Don't go and buy expensive things. Keep focused. I have, of course, my credit do's and don'ts. Don't buy major purchases. Don't close accounts because that hurts you just as bad. Pay them down. Especially, you don't need to open up a whole bunch of credit cards because every time you apply for something, there's an inquiry, which takes away anywhere from 2 to it could be as many as 20 points. For example, if you go to buy a car, that salesman gonna say, hey, I'm gonna get you the best interest rate. What he's not telling you is that he's gonna take your credit and run it through a minimum of 5 to 20 different places to see who can give you the best rate. Now your score just can basically drop from 10 to over 100 points because of that one, looking for that car. And it all shows up as inquiries on your credit. When I pull your credit, I pull directly from the three bureaus, Equifax, Experian, TransUnion. And while you do have a FICO score, mortgages are slightly different. Most of the time they're close, but they're looking at still your history of how you've been paying. Is this person worthy enough to become a home? So the other do's and don'ts, always pay your bills on time and always save money. As my dad used to say, you pay yourself first. Take money and put it aside. Call it my home. Say, hey, this is my money for my home because I know at the end of that rainbow, hey, that's gonna be that house. Like your girlfriends or your guy friends say, hey, let's hang out. That extra $50, I'm not saying okay, just not have a life. However, cut back on some of the fun things that you want to do because you have a goal to meet. Make a goal and set it. Okay.
Okay. All right. Thank you for being here today. We are going to return. I have more questions for you, but this is going to wrap up for this section right here. So thank you again. And
My
guys, please
pleasure.
like, subscribe, share below, and we'll see you soon.